So what did the market do this week? Well, being emotional as the market likes to do anyway. So in today's video, we're going to go over some of what our plays were from Friday and last week. And we're going to give a little background on what happened this past week and some of the plays I'm looking forward to next week. So if you like this video, as always, do like, subscribe down below, and let me know in the comments what you guys want to see next. And if you're investing in education, come check out our full beginner course. The link will be down in the bio. If you want to look at our course, it's 8+ hours of content on how I like to find stocks, how to like to take trades. And a great way to get started is buy over the weekend, watch some of the videos, learn, and then apply it coming into the next week. So on Wednesday, the market opened up a little bit choppy, not doing much, but then once the Fed spoke, they mentioned they're going to keep the rates low all up until 2023, which they kind of already had mentioned before, so it wasn't too much of a shocker, but the market likes to act over emotional, and the market just shooting up, and we started getting hit closer to our all-time high records, hitting the highs of 396, 397, and that kind of stuff. That quickly changed on Thursday when the bond yield went up once again, so the market gapped down massively, and we were all sad again. So what is happening with this market? Keep going up, keep going down, lots of choppiness and not a clear direction. Well, that comes with the market being very emotional. Jerome Powell and the Feds did a great job of hand-holding the market into this recovery, and I think they're trying to get to the point that they're trying to push the market like a little baby bird to finally fly on its own, but the market is saying, no, please, Jerome Powell, please, Feds, just walk us through, keep the rates low, don't keep the bond yields low, but the market, the Feds need to kind of keep, helping this recovery. The market kind of needs to get it on their own. So in my opinion, this year will not be as easy as last year with the yields all-time low and with the interest rates all-time lows as well. So this year will be more like the years before 2020 when the market is just, going up slowly but surely, some choppiness here and there. So the best way to avoid that is to, of course, trade with good risk management, have a plan like we always mention in our private Discord group and in our course. So that's the best way for you to not get burned in this choppy market, is trade with a plan and stick to it. So let's talk about one of our hot plays from Friday. Friday we traded some options calls on Laser, and what happened with Laser? Well, Lasers was just on fire on Friday. So they had news on Thursday actually that a really famous Chinese automaker were going to be using their laser technology into their automobiles. So that gives Laser not just a lot of customers, but also a lot of notoriety and a little feather in their cap. So that news came hit on Thursday. The stock ran up high on Thursday, but quickly sold off with the whole market selling off on Thursday, which didn't help the case. But then the news, that's why it's great to keep an eye on Catalyst. The news kind of recovered on Friday as Laser started going out. We took advantage of it. It was on our watch list as it was a Catalyst play. We found an intraday entry. We traded intraday. We're not swinging this trade, and it was a great play for us. Another trade that we took quickly on Friday right at the open was some Facebook calls. While the market was kind of being choppy and selling off a bit in the morning, Facebook was still soaring, and we took advantage of it. It was one of the few tech stocks that didn't get hit super hard on Friday morning, so we took advantage of that. Also, we played some SPY calls. Realizing 387 was a little bit oversold. There's a whole reaction going on in the morning that we ran up all the way to 391 in the SPY, and then we sold off back to 389. So now to our penny stock plays for Friday. Friday, our main ticker that we traded in our penny stock was ticker CLVS, and we entered around the price of 650 before the market opened. We shared our plan on what we were looking for into this trade. CLVS had news that morning that their drug it's on phase 3 trial, shows that some significant improvement in their treatment. So that's really good news for CLVS. We took advantage of momentum. We found a perfect intraday entry, and it was a good winner for us. We entered around 650 and we sold around $8. So remember this. With these stocks, we take advantage of momentum and we keep an eye on them on the catalyst, but we do not keep these overnight, because usually a lot of times these catalysts are overreaction, so you're going to see it quickly run up and just as quickly cool off. So yeah, be very careful when we're entering our penny stock plays. So what are some of the stocks that I'm going to be looking at for into next week? Well, one of the stocks I've been keeping out on this week that we've not been able to trade, but maybe I'm keeping out for next week, is ticker symbol RIDE. Ticker symbol RIDE is one of the other EV plays that I've been looking for a while. I've spoken to them. Last time I spoke to them was actually way back in November when we talked about their trucks. They recently got hit with a short selling article. The short selling, has been killing it, and the short selling talks a lot about how the company has done a lot of things wrong with claiming how much money they're really making. Well, I'm waiting for the ticker symbol RIDE. I'm waiting for the company to have a rebuttal. Now let's talk about the hype of the day, and the hype for the whole last week. It's been NFTs. If you're not familiar with NFTs, they're like crypto art. They have this little blockchain attached to them that makes you that knows if you're the rightful owner of this NFT or this art. And a lot of stocks have been spiking up a lot. And of course, it's one of those hype plays that reminds you of the weed hype or the EV hype or the Bitcoin hype. So it's one of those places that's very speculative, so you gotta be careful that you're gonna get really high highs and you're gonna have huge drops. So if you wanna be invested in this kind of place, make sure to wait for the big drops, because you're gonna see these stocks run down massively and cool off just as fast. So please don't get caught on this hype and don't be buying the stocks that are very high. If you wanna invest in these NFTs, well, wait it out, and you're gonna see that in the next month or 2 months, they're gonna dip just as hard. So try to get on the dips and sell the rips, like the old saying goes. The main NFT play that we've been taking advantage on is ticker symbol TKAT, and we've been taking advantage of the volatility in the mornings and taking advantage of the momentum. We're not holding this one because it goes up and it goes really hard down just as well. So this is the main ticker that we've been trading in the Discord trading group when in regards to the NFT plays. Now to talk about ticker symbol CPNG. It's actually a very recent IPO that I've not been talking about, just because if you're familiar with me and you're familiar with what our philosophy is, that IPOs usually get really hyped up as soon as they come out. If you think about Airbnb, if you think about Snow, if you think a lot of these IPOs get really hyped up and then they drop off massively. The same thing happened to CPNG, which today IPO'd hit a high of almost 70 and quickly cooled off in the next week at lows of 40s. So what is CPNG and why should it be on our watch list? Well, CPNG happens to be an e-commerce out of South Korea and the Asian market. Similar to how Jamia, a play that we've been invested with for some time, is an e-commerce for South Africa and African continent. So CPNG is another e-commerce, and the great thing about CPNG is they actually have their own shipping facility. So if you're familiar with Amazon, UPS, FedEx, that's how that helps the Amazon to get all their stuff delivered. CPNG actually had to go on their own and create their own trucks to get stuff delivered, which raise the revenue and makes their growth slower. But it's harder for competitors to catch on to them, because if the competitors need to compete with them, they have to go build and get their own trucks as well. So that gives a really good advantage to CPNG. When it comes down to the revenue, they're up 91% from the 2019 revenue of the 2020. From when they first opened up and reported first revenue in 2016, they're up 600%. So they're showing great growth, and of course the COVID has helped out a lot of e-commerce. A lot of the e-commerce space, so that was another thing that helped them boost them. They still have a lot to prove. It's a ticket I'm watching. I think we're still gonna get some cooling off. I definitely think that right price target needs to be at least below 40 if I want to longer term invest in this. So I will be keeping an eye on this ticker CPNG. It's another e-commerce trade I'm looking at, but not quite there yet. So I want you guys to do your own due diligence. Let me know in the comments what you think about this ticker, and I'll see you guys all in the next video. Peace.